Today, let's talk about why Berkshire is lagging the S&Ps a little bit more than it has been in previous years. There's been times where it has before, but it is lagging a little bit more. So let's talk about it. Then, of course, we'll hit all of the major charts and the longer term charts as we head into this next very volatile week of trading with tons of data and the FOMC coming this week. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So in news this week, we got Warren Buffett's Berkshire lagging the S&Ps by its largest gap so far this year. You can see Berkshire B shares have rebounded 7.2%, but not nearly as much as the S&Ps. They dropped almost 15% in the wake of his early announcement of stepping down by the end of the year. Berkshire BE year to date 8.6%, A shares 8.5%, and you can see S&Ps doing even better, 7.3%, closing at all-time highs, up 15.5% year to date, right? So what is driving this? This is what I wanted to talk about. And I just think it's really because Berkshire is definitely much more conservative. They have a lot of cash on hand. They have real businesses that they have to continue to build. Maybe they'll play a little bit of catch up with Apple doing really well, accounting for 6.35% of the S&Ps, closing at its record. Berkshire also owns a lot of Apple, which continues to do well, but it did reduce a lot of that holding, 69%, but it does remain a very large holding for the company. You can see it here, actual value, potential value, share price. So if they hadn't sold any of these shares, you could see they would have way more money than they do now. But moving over to their holdings real quick, I just wanted to highlight they do have a lot of these kind of value plays. Obviously, they are more invested in value. With American Express being a major holding, they own a lot of that company, of course, Occidental Petroleum. We've been hearing about that with a ton of other smaller holdings, of course. But really what I want to highlight here is because this really fits with the thesis that we had last week. Value is probably a better place to be, especially if you're buying for the medium to long term. Look for those value plays. We are at very high levels. I do believe this is bubble territory and that we will be much cheaper in the future. We'll get a PE contraction. I think we'll probably see a slowdown in the economy, at least to some extent, but I think Berkshire knows that, and that's why they are investing in these companies. And you can see it here on the charts. They've lagged most recently, but when the market was kind of falling through the floor, Berkshire was doing really well, and these value plays are going to continue to do well if we see this turn down at some point in the future. Moving over to Fear and Greed here, 33 from a 29 the previous week. We had a little bit of a spike up here, a little bit of a base in that extreme fear area. Are we going to push back to neutral at least? We had a really nice rally on the Friday, so that looked good. Momentum back to greed, strength, still in fear here. Breadth did move up a little bit, but it gave a lot back on the Friday. We'll look at it. And the 200-day breadth. Put call ratio coming back down. Nice to see that. That should confirm the rally a little bit more. Volatility right at the SMA. Interesting. That's a zone where we could see a little bit of a bounce. Safe haven demand, still extreme fear there. And then junk bond demand, still extreme fear, turning back down a little bit. Overall, not too bad on bonds. Bonds did pretty well on the week. Moving over to the AAII survey here, you can see for the 22nd, basically unchanged from the previous. The bears did pull back just a little bit, so the bulls are coming back. Seems like we're seeing a little bit of a swing up here. Kind of fits with the overall bullish thesis that we got at the end of last week, and that seems to be continuing into this week, in my opinion. Moving over to seasonality here, you can see seasonally this is not a great time, but for your normal years, non-post-election years, this is relatively bullish here from the kind of 27th time period up through the end of the month. And this seems to be the rally that we're actually getting. We didn't really get this rally in here so much. Got a little bit more choppiness in here, and now this more regular year seems to be what we're looking for towards the end of this week. And then looking at that seasonal calendar here, you can see bearish Monday, bearish Wednesday, bullish for the Thursday here. Not a whole lot. And then you have Halloween there at the end of the week. Not a whole lot in terms of data this week either. GDP, Q3 advanced. Wouldn't expect a whole lot out of that. It is the advanced numbers. Consumer confidence, if we get those numbers, that could be interesting. And then Chicago PMI on the Friday. Either way, I'm expecting bullishness, but there are a few bears to consider. Moving over to the earnings calendar, you can see for the Monday, Welltower Waste Management, not a whole lot this Monday. And then for Tuesday, Visa, United Health, New Era Energy, American Tower, one of those companies that I hold. United Postal Service, definitely want to see how freight is doing, continues to be a sector that I like to watch. PayPal, fairly interesting. And then Invesco for those Qs traders. And then for the Wednesday, here we go with the heavy hitters, right? We got Microsoft and Google, Meta on Wednesday after hours. Between these top three companies, that's nearly $9 trillion in market cap. So massive amount of money coming out that evening. Caterpillar that day as well. Boeing, they've been on a bit of a tear, and they did have their restrictions lifted on the 737. Garmin for the runners, eBay coming out that day as well. And then into Thursday, it doesn't get any better, right? You have Apple, Amazon, Eli Lilly, MasterCard, Gilead coming out that day as well. Monster Beverage, another fun one to watch. And then for the Friday, we have the oil giants with Exxon and Chevron. Colgate, Palmolive, Dominion Energy also coming out. And then Church & Dwight for you, dividend investors, as well as Federal Realty. Moving over to the economic calendar for the Monday, durable goods orders. Previous numbers were not very good. Would like to see better numbers there. Atlanta Fed GDP, 3.9% for Q3. Still really, really strong if we get anywhere near that. For the Tuesday, consumer confidence, like I mentioned, that would be interesting. And then we have the FOMC here on Wednesday. So it's going to be a very volatile week. We'll see how it plays out. With all of those mega cap tech earnings, huge amount of market cap, and then you got an FOMC that's going to come out and very likely cut. But what are they going to say? Are they going to signal one more cut this year? What are they going to say? Is it going to tank markets because they're concerned about the economy slowing down, concerned about jobs, and that's going to spook markets? That could be interesting. And then for the Thursday here, like I said, Q3 GDP numbers, 3 on the forecast. Previous number was a 3.8. Interest rate decision for the Eurozone there on Thursday, expected to hold flat there at 2.15. And then for the Friday, PCE price index, as well as Chicago PMI. Moving over to the charts, looking at the S&Ps here, really, really strong week. 1.92% got the continuation off of the previous week. Momentum stepping back to bullish. RSI back to bullish, almost overbought conditions there already at a 68.44. You can see the clear divergence though. Previous peak was 3 weeks ago and then 2 weeks ago here. And then this last week, we are at all-time highs, but we have a weaker strength there. So that's something to consider, but your target would be this trend line here around 7,022. And I certainly think that that's in play. That is in only 3.33% or so, somewhere in there. I think we could absolutely get there before this kind of turns around. That was the most recent kind of trend structure that hit that zone, kind of faded off of it and then sold. We're going to get back to that before we have a major reversal. It's certainly a possibility. We have been fading for a while, but we have been melting up pretty consistently now for several months, and I don't see any reason why that would stop, at least for now. And then looking at that daily chart, like I said, still looks really, really bullish. Gap up on the Friday was really powerful, got above here, up 0.82. Looking for this trend structure in here, momentum bullish, RSI bullish. For the Monday, that zone would be around 681.82. Moving over to the Tasty charts here on the weekly chart, you can see we are right back to that upper ATR band. Right now, that is sitting at 679.99 or 680 or so. This seems to step up about $4 or so every single week at this point on this current trajectory, $3.50 to $4. So if that steps up consistently, that'll put us at $683.50, which gives you about $6 or about a 1% move to that upper band before you would see some overhead resistance, which this has been holding as overhead resistance since back here mid-September, and that continues to be overhead resistance, right? So we're stuck between the 8 EMA and that upper band, 666.88, and that upper band continues to be bullish. But just understand that that's overhead resistance, and I don't suspect that this is going to really get above that for any length of time. And then looking at the daily chart, we still have bearish conditions here. We're right at that trailing stop, 678.66. If we can get a close above that, that would be obviously much more bullish. And then the upper band here on the daily chart is much higher at 689.01. Moving over to the NASDAQ here, you can see 2.18% on the week. Momentum back to bullish. RSI already overbought at a 70.28. That upper trend line here for the target would put you up around 2650, 2660 or so. If we did get there, that would be about 2.5% of upside. I think that's certainly a possibility this week. Do we close up there? I would say probably not, but I think we could absolutely get there at some point during the week. And then if we broke out, your upper zone would be around 28,350. I don't think we're going to get anywhere near that anytime soon, but over the next couple weeks, it's certainly not impossible. Probably next couple months, realistically, sometime next year, if this structure continues to hold. And then stepping back down to that daily chart, I did put some levels on here. You got 611.75 was the kind of that previous high from back here on the 10th, and then once again hit that zone on the 20th and the 21st, and then gapped through that level on the Friday, gapped through this trend line on the Friday, continuing to look super bullish there. Momentum back to bullish. RSI has a little bit of room pushing through that SMA on the daily chart. Everything looks good. I did add a level here as well at 595. 55 is kind of this consolidation low. Held that zone in here. Looked really, really bad, obviously, on that Friday, but we were able to recoup that pretty well, and now we're back to all-time highs. Continues to push to the upside. Moving over to the Tasty charts here, that upper band, same kind of thesis. We're watching that upper band, 617.76. We finished right at it. 617.10 was the final price in the after hours. 617 flat was the close, and then again that continues to step up very slightly here, about $4 or $5 every single week. So again, that gives you about 1% of potential upside for that closing basis. 8 EMA 596.57. That has held really, really well over the past several months and continues to do so. So very much bullish conditions, continuing to look for more bullish price action. And then looking at that daily chart, same thesis as the SPY chart, still have that overhead trailing stop as a bearish condition. I'm not trading that right now. 620.87 would be that level. I think we'll probably push through that at some point this week and then get back into bullish conditions. The upper band right now is at 630.05. Moving over to the Russell here on the weekly chart, 2.47% continues to look good. Momentum bullish, RSI bullish, closed above this trend line for the first weekly close. We got above it a couple of times for some daily charts, but we could not get above it for the weekly charts, and we were finally able to do that here. I want to extend this out, see if that continues. Seems like it has been mattering a little bit, but either way, it looks really, really good. Interesting to see that trend line starting to matter a little bit more here. That is this trend line that was marking many, many tops through here. Take those lines off so you can see it a little bit better. So it was marking this kind of intermediate top before you had these kind of peak levels here. Intermediate top, retested that zone before the big sell, and that is the same trend line that we're at here. You can see it right in that zone. We're right at it. It's been struggling on this consolidation of trend lines, but we are above this first trend line, went right to the second one. Can we push through here and get towards these upper bands in this kind of 268, 270 area? Again, I think that could take a couple of weeks, maybe a couple of months, but structurally this continues to look really, really bullish. Momentum and RSI still very much bullish. And then jumping back down to the daily chart, you can see almost right to it, almost perfect there, and then rejecting off of that zone. Had that one fake out candle on the 15th, but otherwise gapped up, rallied. Wouldn't shock me to get a gap fill, but get the continuation here, just leave that one behind. Short term, super, super bullish. Momentum and RSI, same kind of thesis. Want to see it hold above the SMA. Want to see this continue to push to the bull side and start to look for those upper levels. The peak level here from that Wednesday candle, the high there was 252.77. I think there might be a little bit of sellers in that area, but I think we can get through it. I think the Russell should be pretty bullish. Moving over to the Tasty charts here. This one doesn't look as good on the Tasty charts. You can see we were riding that upper band for a while, tagged it last week, and then sold off. Want to see this push towards that upper band again for this week. It was around 255.90, and again, that's been stepping up about $3 each week, so that should take us to kind of 260 or so, which actually makes sense kind of with that target we talked about. I think we can get up into that area if we get the continuation into that zone. Support is going to continue to be 241.23 on the 8 EMA. That'll step up obviously a little bit this week, just a couple of dollars. I think that'll continue to be support. That's pretty much what we've been doing. Hit the 8, buy the 8 touch, look for the upper band, continue to trade that way, at least for now. And then looking at that daily chart, really, really nice here. Gapped up through that first ATR band. Want to see it push at least to the second one. Right now, that second band is sitting at 253.91, which gives you a pretty good amount of upside to that next band, about $4 or 2%. And then the upper band, we haven't really been on it on the daily chart, but if we could get a push to there, that would be 258.50. Moving over to the equal weights, we had a nice week, 1.73%. Right back to the highs from that 29 September week. That was the week that we were hoping for a kind of breakout above these highs, big continuation, and then we got the terrible week the following week. Now we're right back to that. Is this going to be a short-term topping pattern with kind of a double top in that zone? Or are we going to push through that this week? Momentum is still bullish. Daily chart here. And then looking at the RSI, we're just barely above the SMA. Want to see this pushed to overbought conditions like we did back here. Otherwise, you still have this kind of divergence from this previous peak back here and from these previous kind of highs in here. But price action is king, and it does continue to look bullish, at least for now. Moving over to the SPY Russell and the NASDAQ SPY, you can see the Russell continues to do really, really well. This continues to break down here, meaning that the Russell is outperforming, and I do suspect that is going to continue here. I think the SPY is going to continue to underperform at least a little bit. So this should continue to go to the downside, giving the Russell more room to the upside. And then looking at the NASDAQ SPY, I did add a trend line here. We are right kind of at this peak. It marks this perfect top here, 19 February. Marks it again, 11 August or so, and we are right there once again. Are we going to push through that and get a bigger continuation, or is this going to be another topping area, something to consider? If the NASDAQ does turn around, that usually means markets are going to be going lower. Really like to see the NASDAQ continue to lead us to the upside, which right now it has been. But if we do get a rejection from here, that's going to be a little bit more concerning. Moving over to the SPX divided by the M2 money supply, back to momentum bullish, RSI bullish. You can see we're back above that 14 level. We were right at it the previous week after the big sell, and then we pushed through that area, gapped and rallied, and now we're headed very, very close to those all-time highs here, which, remember, this is the zone where you're in that kind of dot-com bubble area. I do believe this is going to be a massive bubble. We came down and tagged kind of the peak level where you can kind of maintain prices in here around 22. And if you zoom out, which we've done a million times here, that peak level from the dot-com era, we are already in it. We've allocated so much of our money to the stock market. I don't think this is going to last forever, but continue to ride the ride while it's going. Continues to go towards this trend line here around 31, and then that peak level 32.71. Moving over to the Mag 7, I did add some levels here at 357.91 and 379.22 to kind of bisect this structure that we had. Had a clear kind of top, came back, retested that zone, and then bounced. Now we're right at the highs, that high level, that 379.22 level. Kind of put that in on the 15 September week, retested it the following, kind of fell for 3 weeks here. Now we're right back to it. If we can get through there, back into price discovery, that would be pretty bullish. Of course, this does kind of look bull flaggy, and that is the setup that I'm trading for now. Momentum bullish, RSI bullish. Moving over to Apple and Microsoft. Apple had the breakout here, 4.17%, closed above the level to 60.10. That was the one we were watching. This is all-time highs. This is price discovery for Apple. It's been a really powerful run off of this 4 August week, and now we're pushing through these levels here. Continues to look super, super bullish. And then looking at Microsoft here, up 1.95%. This doesn't look as bullish. I think we can maybe go to the trend structure here, maybe back to this highs around 530 or so, but I don't really see this pushing out through these levels back to all-time highs by any means. The momentum is a little bit bullish, okay. RSI, I think we probably retest the SMA and break down from there, but either way, still kind of looking at sideways consolidation, still waiting for this to kind of catch up over the next couple weeks. And I do think it'll take at least the next couple weeks. Moving over to Tesla and NVIDIA. Tesla had a bad week, 3.4% down off of their earnings, hit that key level, 450.22. That's been the key level over the last couple of weeks, and we've continued to sell off from there. Momentum bearish, RSI bearish. I think this is probably going to head back towards that kind of 414.50 area. I was pretty surprised to see it hit that zone and bounce so aggressively on the Thursday candle, but looking at the weekly chart, you can see that continues to be basically the top and bottom of this trading range. If we can get above it, I think you're probably headed towards kind of 480 to 500 area. If we break back below it, you're probably headed towards that VWAP around 384. And then looking at NVIDIA here, this closed back above the level, that kind of 184 area. We've been above it, but if you look at this on the daily chart, it's really struggled to stay above it for any length of time. You can see the previous week tried to get above it and then closed back below it. Momentum is still bearish here. RSI still struggles right at the SMA. That is concerning. Certainly looks like a peak area, but for now, as long as we hold above that 184 area, that is continuing to be bullish. Can we get back towards that 195 area? Moving over to Meta and Alphabet here. Meta had a good week, up about 3%, right to that kind of 736.68 area, right in the zone of resistance. The 9 EMA is right there as well, 737.78, just barely above it. Momentum stepping back to bullish, but RSI, right, we have this continuing downtrend. We're going to come back here, retest it, and then sell. That is very much the concern. Otherwise, you got Alphabet here. This looks like a bull flag breakout. Big continuation, up 2.65%, all-time highs. Price discovery continues to look super, super bullish. Moving over to Amazon and Broadcom here. Amazon 5.24%, really, really strong off of the key level. 212.25, hit it to the penny on the previous week. Momentum back to bullish. RSI, we're going to hit that SMA and reject again. That same kind of setup as the overhead resistance, hit that kind of lower high setup, and then the continuation to lower lows potentially. Still looks like a nasty double top on the longer time frame here, so doesn't look super good to me, but in the short term I could see why you would want to try to stay a little bit more bullish. And then looking at Broadcom, added a quick level here, 321.70, kind of between this peak and this low. Broadcom's kind of hard to trade, right? But I do like to keep an eye on it. It doesn't look super great right now with a high, kind of lower high setup right at the trend structure. Still waiting for these EMAs and SMAs to catch up. It's been a massive rally, but it does seem to be slowing just ever so slightly. Moving over to staples and discretionary. Staples sold off 0.8% on the week. Discretionaries were actually really strong, 1.38%, right above that level. 235.85 still have that trend line overhead resistance. We've been watching that trend line for a long time, marking these tops perfectly through here. Came into the zone again, pushed through it. Now we're right back to it here on the breakdown kind of retest. If this is a retest rejection, that's going to be terrible. Certainly looks like it on the SMA here on the RSI, so also not looking very good there. But for now, it is holding up. Can it push through here? And then looking at discretionaries, like I said, sold off nearly 1%, still holding this zone as support in here. On the weekly chart, this looks a lot more terrible, right? You have a long consolidation, all of these caught up, structurally broke down here. 144 is still support around 76, 79. But on the daily chart, it does look a lot more bullish here. I want to see this hold in here, get the higher low setup and push through this structure back into this kind of 83 area, I think would be interesting. But over the longer term, this does not look very good. And if this structure is truly going to break, you could actually see this going back down to the kind of 60 to 70 area over the medium to very long term. I think that would take a while for that to happen. Obviously, staples does take a long time to move, especially that far, but I wouldn't say it's out of the realm of possibility this goes back into that kind of same area where we were October of 23 time period, kind of the lows really from all the way May of 21 back here to December of 23 area. Moving over to breadth, 20 and 50-day breadth, like you can see here, it was okay, right? We gapped up, rallied pretty decent, couldn't get above the 68 area. This is kind of more consolidation, but you can see low, lower low, lower low, high, lower high, lower high potentially. So it's not kind of continuing to chop sideways like this where you get back into the same zone, hold the same support where it's pretty consistent. This is fading for sure, and that is the same kind of setup that we're seeing on 50-day breadth. Continues to do that same kind of fading, very slowly going lower. This started to accelerate here, which is why I thought we might have actually gotten the top, and then we got the break to all-time highs. So we'll see, is this a fake out and it's ultimately going to fail? We're going to get a push to a lower low here, and we're going to see one of those bigger spike downs. It's been a while, right? You can see this took place kind of October of 23 and then April of 25. Here, January of 25. This kind of spiked down April of 24. So every couple of months seems to happen at least a little bit. This wasn't very deep. I think I was looking for a little bit deeper cut if this is the bottom, which I don't think that it is necessarily, but we'll see. Either way, markets look super bullish and don't seem to care about this right now. Moving over to 200-day breadth, also positive 8.25%, still holding above that 50 area. We haven't been below that anytime recently. Got back above it here in June and then continued to stay above it, really between this kind of 54 and 68 area. We've been chopping sideways, not really lower lows. We did have that big kind of fake out here, which is why I was concerned, but since then, we've rallied right back to these highs. We hit that kind of wick high resistance area. Next one, do we kind of sell from here? Do we push through and kind of push towards that ultimate peak? Either way, structurally, we're above this line here. So that is holding up. That looks a little bit more bullish. Momentum back to bullish. RSI is the concern, right? We're right at the SMA with this kind of low, lower, low, high, lower, high. Right at the SMA. If it rejects here, that's going to be concerning, but for now, structurally, everything looks a little bit bullish for me. Moving over to the dollar continues to show this kind of rounding up price action here. Solid base, zones of support, momentum still really bullish. RSI still has plenty of room to get into overbought conditions. We're fading a little bit at that level, 99.83. I still think this is going to go towards that 55 EMA area around 102, at least 101 to 102 area. Obviously, there will be some sellers in here. There's a zone of resistance for sure around that area. But again, we're above the 21, we're above the 9, we're getting the cross here. This looks really nice. Should continue to push here over the next couple of weeks, I would really like to see this go 2 to 3% into this area. It's been a while. We are coming off of those kind of very, very oversold prices, and it's certainly taking a while for the dollar to regain this momentum to the bull side, but solid base. I think this is going to go here over the next couple of weeks. Moving over to bonds. Bonds were up. You can see J&K up about 0.5% right to that level, 97.74. This continues to look super bullish after we've gotten above everything here, above that 200, the breakout here. Everything continues to show bullishness. Held that 55 EMA test, momentum bullish, RSI right at that SMA. That is the concern, right? We're here once again, want to see it push through there and get towards those overbought conditions again, get towards this trend structure in here. That would be interesting. That would give you a price target around $99. That's definitely some kind of risk on here. So you got a nice base, rallied up, a little bit more risk on price action from J&K, definitely to confirm that rally, but also looking at TLT, also continuing to rally here over the past couple of weeks. 4 weeks in a row of bullishness. Is this kind of a wick rejection before a little bit of selling? It's not impossible. We're not overbought yet. I still want to see this hit that 92.82 level. We're kind of in no man's land. There's no real pivot points here to work with. I think this should go to that level at least, and then you have the overhead 144 there at 93.56 or so, kind of in here right towards that highly traded zone. I'd honestly like to see it tag that before we turn, but wouldn't shock me if it did turn at the 92.82 level. Moving over to volatility. Volatility sold off really aggressively this week, 21%, headed towards that level, 1470. At this point, I think we're going to tag that before anything happens. And then we'll kind of hover there for a bit, and we'll see what happens after that. Do we come in and tag it and flip immediately? It's not impossible, but I just don't see that happening. We got the big spike. Seems like a short-term culmination. Unless earnings are really terrible or the FOMC says something crazy, it's not impossible that we tag it, get that major catalyst, and then get the spike out from there. Moving over to my accounts, I made money on the week, so that was good. Like to see that. And then in terms of current positions, IWM positioned here for 247 for 4 days from now. That is the Wednesday expiration. Max profit there, almost $5 credit, so that would put me at 252. And then looking at the Qs, 607 for the end of the week. Could be a lot of volatility this week, so we'll see how that plays out, but it's in really good position. You can see buy price 605 here. We're already at 617, so in really, really good position. Call price here above the buy price, so you like to see that as well. For $13 credit up to 620. Gives me just a little bit more room to the upside if we do continue to get that rally, but there are some risk factors that I want to try to mitigate as much as possible. And then same position here, TLT, still think that's going to be pretty good. And then the dollar, still bullish on the dollar as well. Let me know down in the comment section what you think of Warren Buffett's portfolio and why he is lagging the S&Ps. Do you think it makes sense the way they are investing right now, or are they going to be left behind as they're not investing in the big tech sectors as much as the S&Ps and really the NASDAQ are? Let me know. Otherwise, like and subscribe. If you got any value out of this video, make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.